following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Wall Street is full of stock-picking robots. That's the headline that appeared in an article on smartmoney.com about two brothers, Alexander and Thomas Hunter, who've been scamming stock investors since they were just 16 years old. We'll get into details of that story and some other exciting financial topics today. Welcome to All Things Money. I'm your host, David Blain. We're glad that you joined us today. We're broadcast on 94.1 FM WNBU, as well as cable TV 10 in New Bern. A lot of you also download the videos or listen to the audio from our website, www.dlblain.com. We welcome you as well. If you have any comments or questions for the show, topics you'd like us to address, please let us know. We love to hear from our viewers and listeners. You can contact us through email, allthingsmoney@dlblain.com. You can also call us, 252-633-0107. And, of course, you can contact us through the website, dlblain.com. That's www.dlblain.com. Okay, back to the headline story here. These two brothers, Alexander and Thomas Hunter, were indicted by the Securities and Exchange Commission the other day for scamming investors, and talked about they started when they were just 16 years old, and by 20 they had racked up more than $3 million from investors and stock promoters from what they called a stock-picking robot. Now, I'm not making this up. Go research this yourself. This is actually true. And the reason I'm bringing this up today is if you leave out some of the humorous parts of this story, a lot of it sounds like hedge funds. In fact, the joke of the article was that Connecticut-based hedge funds are trying to track these guys down and recruit them to bring them in to their firms. But they talked about starting at the age of 16, they developed an elaborate scheme to manipulate the prices of penny stocks at the expense of unwitting investors. On the one hand, they told investors they had a stock-picking robot. That's right. I'm not making this up. A stock-picking robot. And they sold subscription newsletters to the robot's latest tips at websites doublingstocks.com and daytradingrobot.com. And then on the other hand, they secretly raised money from penny stock promoters with the promise of pumping their stocks through the same robot newsletters. And this is quite a common theme, and another reason I want to bring this up is you've just got to beware of what's out there on the internet. You know, this guru saying he's got this formula for picking stocks, or this hedge fund has this secret black box algorithm for eking out profits. It is just so difficult picking individual stocks, trying to beat the market, and a lot of these things are in fact scams. So, you know, what kind of sucker falls for a stock-picking robot? According to the SEC, about 75,000 investors handed over at least $1.2 million for subscriptions. I was joking in the office before this. This is just ridiculous. If you're a business owner out there and you're having a hard time attracting clients and things like that, I love pointing to stories like this. And if somebody with a stock-picking robot can scam 75,000 people out of $1.2 million, if you have a legitimate product or service, go out there, do your marketing with the faith that the customers will come. Anyway, the article goes on to say that this stock-picking scam is not much different than Wall Street banks. The scammers said that this robot was a highly sophisticated computer trading program, the product of extensive research and development. That's exactly what these money managers and Wall Street tell their clients about their latest computer algorithm and black box investing. So they pocketed $1.2 million from selling the subscription to this newsletter. They pocketed another $1.9 million by selling their stock promoting services through their separate branded business, equitypromoter.com. So if you wanted someone to pump and dump your stock, you called them, they promoted it in their newsletter. So the company paid them to promote their stock, and then subscribers paid to get that newsletter. Anyway, to me it sounds, once again, there's a lot of similarities between Wall Street. We talked a little bit about this several weeks ago about the Goldman Sachs executive that quit, and he talking about, people are referring to him as the Muppet guy because he broke the news that in Goldman Sachs they call their clients Muppets, which is just horrendously offensive. But that's exactly what Goldman does. They create these products that they don't want at the investment bank. They pump them up to their clients and they dump them. So they call them prop desks or proprietary trading desks that trade with their own clients. And so the point of this article was really, what's the difference between these guys that were arrested or indicted by the SEC for the pump and dump scam? What's the difference between most of the hedge funds and your big Wall Street brokerage firms? Of course, my firm being in the investment industry, we have tried to take to be the shining light in the industry by accepting no compensation from anyone else. We're a fee-only firm. We don't have a prop trading desk. We don't have an investment bank. We don't have a bank to try to sell you private labeled mutual funds. Fee-only model. It's promoted by Clark Howard. The NAPFA fee-only model, we think, is the appropriate type of financial advice that you get. If you're out there on the internet getting your advice, or getting your advice from one of the larger brokerage firms, or even some of the smaller ones, some of the more well-known brokerage firms that promote Main Street as their customer, they underwrite municipal bonds. And so when you go into the office and you're sitting there with your broker, a big reputable name, on the wall, you got to ask yourself, what, and by the way, and they're not charging you. That's the biggest giveaway, is that when they're not charging you, they've got to be making their money from somewhere else. Now, of course, we charge our clients, so we bill them monthly. They get a bill every month. They know exactly what they're paying for. You go into some of these places that you're not sure what you're paying. Well, you're almost guaranteed that they're making their money by selling you some sort of proprietary product or taking the other side of trades against you. So anyway, check that out. Once again, it was on smartmoney.com, April 24th. Wall Street is full of stock picking robots. And it was about the Hunter brothers scamming investors since they were 16 years old. I think in here it said somewhere they're actually from England. But anyway, interesting stuff. Okay, well, that brings us to our first break. When we come back, we'll continue with some more exciting and fun topics related to finance. So for All Things Money, I'm your host, David Blain.